Assalamualaikum. Today we will be presenting our company analysis specifically for companies in the energy sector. Firstly, I would like to say thank you to our beloved lecturer, Ms. NURUL HAIDA BINTI JOHAN, for giving us the opportunity to present today. I would like to introduce the group members. First is FAWWAZ bin Mohammad, Mu'ain Ali ABQARI bin FAZLI, Muhammad Alif bin Muhammad Alif bin Muhammad ZANI, and lastly myself, Muhammad Hikal bin Muhammad Salim. I would like to give way to FAWWAZ for his presentation.
Thank you, Mr. Hikal, for your introduction. So now I will continue to my presentation. So, economy of Malaysia. Malaysia economy has significantly changed and developed from the year 1970 from just exporting raw materials such as rubber and tin to be one of the most strongest and fastest to grow in the Southeast Asia region. Malaysia is the country that major in producing rubber and palm oil and one of the largest country to export petroleum, natural gas and commercial hardwoods. They also use comparative advantage to educate their labour force and develop their infrastructure. Malaysia improvement on their economy has attracted foreign countries to invest on their countries such as Japan and Taiwan. Since 1970s, the government of Malaysia has a good social and economic restructuring strategy by creating a policy that called New Economic Policy (NEP) and changed the name to New Development Policy (NDP). This policy has bring the balance between their goals of economic growth and the redistribution of wealth. Moreover, it also aspired the private sector to play a major role in the restructuring the process. So, for the next slide, I will talk about the current Malaysia economy. Malaysia has expected their GDP or gross domestic product to significantly grow between 6.5% to 7.5% in 2021. However, in 2020, the GDP growth has declined by 4.5%. This is mainly because of however, they are expected the GDP growth will increase mainly because of the improvement on the global growth and international trade. Moreover, the government has also implemented the stimulus package to uplift the economy in 2021. However, they need to maintain two factors, which is the containment of the pandemic and sustained recovery in external demand. The Malaysia economy has declined by 8.3% in the first quarter of 2020 and 17.1% in the second quarter of the 2020 because of the pandemic. However, the stimulus package that will be implemented by the government is expected to increase the economic development in a slower pace on the second half of 2021. Next, I will talk about the COVID-19 impact on Malaysia economy, which is on the next slide. As we know, COVID-19 that started in Wuhan, China, has become a global pandemic. Malaysia also one of the countries that is affected by the global pandemic. A variety key of sector in Malaysia has been affected by the pandemic. This sector including manufacturing sector and the tourism sector. As we know, tourism sector has been affected because of the tourists that has cancelled their hotel and flight booking. This is a huge loss for Malaysia because that is the third most popular country for tourists to set their travel destination. Furthermore, Malaysia value of ringgit also has decreased because of most of the investors has sell their stock to avoid the market volatility condition. Other than that, the declining price on global crude oil will reduce the demand for ringgit, thus will make the value drop. Lastly, Malaysia's stock market also has been affected by the COVID-19 as Bursa Malaysia decreased to their lowest since the last 10 years, falling about 20.52% since the first quarter of 2020. The current pandemic has bigly affected the airline stocks such as AirAsia and Malaysia Airlines. But there are also positive impact on the stocks such as Top Glove because they have priced around 30% on the first quarter of 2020. So that is all from me. I will pass the next presentation to Alif.
Thank you, Mr. Fawaz. Now we will proceed to the GDP, gross domestic product, and inflation rate in Malaysia. As we know, GDP is the final value of the goods and services that produced by a country, and GDP also an important indicator to measure the economic performance of a country. As we can see from the chart in the presentation, we can see that in 2070, the GDP of Malaysia is 319.1 billion ringgit Malaysia, and for the 2018 is 358.7 billion ringgit Malaysia, and in 2019 is 364.7 billion ringgit Malaysia. As we can see that in 2019 as the highest GDP, which is RM 364.7 billion. So we can conclude that in 2019, Malaysia has a good economic performance. Next, we will proceed to the inflation rate. As we know, inflation rate is the percentage that show the price of good in a country. So, in 2070, we can see that the inflation rate in Malaysia is 3.8%, which is quite high. And for 2018, is 0.7%, decreasing from 2017, and in 2019 is 0.66%, which is the lowest for the 3 years. So we can see that in 2019 that Malaysia have a good inflation rate. Next, we will proceed to the import and export in Malaysia. For the total import, Malaysia has have a total around 849.41 billion ringgit Malaysia for total import. The most product for import is electrical and electronic product. The second is other product, and the third is chemical product, and the fourth is petroleum product. For the total export, we can see the total is 908.64 billion ringgit Malaysia, which is higher than the total import. And the most total export product is electrical and electronic product, other product, petroleum product, and chemical product. We can see from the both diagram that the total export is higher than total import. It shows that Malaysia have a positive balance of trade, and it's a good indicator. Next, I will proceed to the to Mr. Muai.
Thank you, Mr. Alif. Now we will proceed uh, to the energy industry in Malaysia. The energy industry in Malaysia is include oil and gas drilling, refining, electrical power industry, and exploration and development of oil or gas reserve. The major companies in Malaysia for the energy industry is Petronas and Tenaga Nasional Berhad. The energy industry that we choose to analyze is a company of petroleum or oil and gas, which is Dayang Enterprise Holding Berhad, Hibiscus, Petra Energy, and Petron. Oil and gas were first discovered in Sarawak in 1910, and it has been the basis for the Malaysia development in oil and gas until today. About 42% of oil have produced in Sabah, while in the Peninsular Malaysia is 32%, and other 26% is in Sarawak. While for the natural gas, Sarawak produce 61%, Peninsular Malaysia is 26%, and Sabah is 30%. The oil and gas sector are one of the top industry that contribute to the Malaysia government income, approximately 35% of Malaysia revenue. As we can see, the chart at the slide, it shows a share in gross domestic product of Malaysia from 2009 to 2019. In 2019, industry contribute 37.42% to Malaysia GDP, where about 35% is contributed by the oil and gas sector. Next slide is about the future of oil and gas. Malaysia government has contributed a lot to the oil and gas industry, such as toward the policy and a planning to secure the industry in a long-term success. The objective is to increase the production of oil and gas capacity up to 5% every year. Malaysia also aim to be the number one exporter of oil and gas hub in the Asia Pacific region. However, the future of oil and gas sector is not well in terms of production as the coronavirus pandemic hits Malaysia. Oil and gas company in Malaysia also have not fully recovered from the fall price of oil that effect from the COVID-19 and the war trade between China and United States and the fall in Brent oil price. So some expect this problem will solve on the second quarter of 2020, but as we can see now, the year 2020 is a lost year for oil and gas. Thus, many of the oil and gas company expect the year 2021 will be better. There are many analysts and many companies have voiced the problem faced in 2020, such as RHB Investment Bank oil and gas analyst Sean Lim said the year 2020 is the worst. He also said that after this problem has solved, the industry and market will be different for the oil and gas industry. While MIDF research oil and gas analyst Noor Atila Muhammad Razali view the problem is just a temporary if the situation solves within 6 months. Therefore, due to the problem faced in 2020, the future of the oil and gas industry are still unpredictable. That is all for the industry energy in Malaysia, especially on oil and gas. Now, I will pass to Hikal.
Thank you, Muain. Next, I will be presenting about the stock market of Malaysia, FBM KLCI analysis, specifically the market index. The stock market index can be defined as an imagining of a set of group of companies that represent a portion of the stock market. Investors use market index to have a general view of how it is the stock market is doing for such countries. Furthermore, the Malaysia Stock Market Index is known as FTSE Bursa Malaysia KLCI. They are comprised of the largest 30 companies that are in the Malaysian stock market. As you can see on the chart, the market index experienced a downtrend in 2018 till 2019 due to several factors such as change in the government and the trade war between the United States and China, to name a few. After that, the market index had a huge drop due to the COVID-19 pandemic that the government of Malaysia enforced movement control order that hinders businesses. For the future prospect of the market index, Maybank Investment Bank Berhad estimate that the market index would hit 1,830 points at the end of the year of 2021 due to the stimulus package by the Malaysian government and also due to well-performing sectors such as healthcare and recuperating industries. Thank you. Now I will pass to FAWWAZ for the next presentation.
Thank you, Hikal, again for your explanation. So now I will talk about company that I choose, which is Petra Energy Berhad. So Petra Energy Berhad has operates more than 30 years and they have succeeded on establishing the oil field offshore in Terengganu. The company vision is to become a sustainability company, which is same as their services. They also had done some development and production on petroleum and on small and marginal fields. So for the next one, I will talk about the fundamental of the company. Next slide, please. So for the fundamental of the company, as we can see, the net earnings for the company in 2017 to 2019 has significantly increased from RM 46.03 million in 2017 to 61.92 million on 2019. This shows that the company are able to generate a good amount of net income compared to the past 2 years. So for the return on asset can indicate on how the company can generate their income by utilizing the asset. The ratio is good for the company to compare their performance year by year. As we can see on the table, Petra Energy Berhad return on asset from 2017 to 2019 as on the table has significantly increased from negative 5.52% to 9.91% from 2017 to 2019. This shows that the company are able to utilize their asset to gain their revenue. So moving on to the next one, which is return on equity, which is ROE. ROE is a method used to indicate the financial performance of a company by dividing the net income and the shareholders' equity. ROE are able to measure the profit of a company by the stockholders' equity. On the table above, it shows that Petra Energy Berhad return on equity ROE from 2017 to 2019. As we can see, the ROE significantly also increased from negative 13.04% to 16.26% from 2017 to 2019, which shows that the company are able to generate their revenue from their equity year by year. Moving on to the next one, which is dividend per share. As we can see, dividend per share is actually calculated by dividing the total dividend with the number of outstanding share. As we can see, Petra Energy Berhad DPS has increased from 2017 to 2019. However, on 2018, there is no value on the DPS. This shows that the company highest DPS is RM 0.044 cent in 2019. So that is all from me. I will pass the next presentation. So we move on to the technical analysis. So as we can see, the technical analysis on Petra Energy Berhad. There is a trend line drawn on the last 5 year of the chart. As we can see, the trend line is a moving uptrend. Uptrend trend line is drawn from the lowest price of the stock connecting to the highest point of the price stock. For the support and resistance of Petra Energy Berhad, we divided into two, which is the minor and major of the support and resistance. For the minor support, we put it on RM 0.541 because the current chart movement is ready to fall under the price. Meanwhile, for the major support, we put it on RM 0.244 because the price has not been broken since the last 5 years. For the next one, the resistance, we also put two resistance, which is minor and major resistance. For the minor resistance, we put it at RM 1.25 because the price has not been broken yet. For the major resistance, we place it on RM 1.550 because the price is the highest peak through this 5 year timeline. So I will talk about the next one, which is the price pattern. As we can see on the chart, there's a bullish price pattern on the chart, which is used in the shorter time range. The flag pattern is used to indicate the probability continuation of a previous trend from a point at which price have drifted against the same trend. For the price indicator, I use moving average 200 to identify the buy signal for the Petra Energy Berhad. As we can see in the graph, the moving average 200 has already crossed the candlestick, which means that there is a buy signal for the stock. Therefore, in my opinion, the price of the stock for Petra Energy has the possibility to go higher and break the minor resistance. So that is all from me. I will pass the next presentation to Muain.
Okay, thank you, FAWWAZ. Now is analysis for Petrol Malaysia Refining and Marketing Berhad. So the company background for Petrol Malaysia Refining and Marketing Berhad is an oil and gas company. The company first established on 7 September 1933, where the company started the business as Vacuum Standard Oil Company based in Philippines. Their first company name is ESO Philippines after the partnership of Standard Oil and Saucony Volume, vacuum end in 1962. In year 1973, the Philippine National Oil Company buy Esso Philippine when the oil crisis hit the company that time. So in February 1988, the company was renamed to Petron Corporation. In year 2013, Petron Corporation Berhad officially launched their operation in Malaysia and become Petron Malaysia Refining and Marketing Berhad by taking over the ExxonMobil and Excel Petroleum in Malaysia. Now, the Petron Malaysia Group become a part of the Petron Corporation in Philippines. Next slide is about the financial analysis of Petron Malaysia Refining and Marketing Berhad. Based on the table in the slide, it shows the earning, return on asset, return on equity, and dividend per share of Petron for the year 2017 until 2019. Why there is only shows the earning, ROA, ROE, and dividend? This is because these are one of the most important historical financial performance of a company. So an investor will look at this to measure whether the company is good or not in the future to invest. Okay, by referring the table, earning of Petron for the year 2019, 2018, and 2017 is 177,162. For 2018, 224,540. And last for 2017 is 405,173. We can see petrol earning is decreasing from 2070 to 2019. Earning or net profit is important to the company and investor because earning can show whether the company business is positively profitable and successful for the long term to the investor to invest. For that reason, it is not a good time to invest as the patron earning is decreasing. Next, look at for the ROA of Petron for year 2019, 18, and 17. ROA measure the profit of a company alongside with its total asset. ROA shows the investor how good the management of a company in using their asset to make profit. The ROA for 2019, 18, and 17 uh, is 5.57%, 7.16%, and 14.88%. We can see the ROA from 2018 to 2019 is also declined, and this is not a good sign for the company and investor as Petron Financial Management is getting low in generating profit by using its asset. After that, we look at ROE of Petron. ROE for year 2018 is 90.92, 2018 19.46%, and 17 is 26.80%. So ROE measure the profitability of a company in relation of its company equity, meaning ROE shows the manager and investor the overall profitability of a company on how they generate profit from its equity. High ROE is good and low ROE means a company is less efficient in using their equity to create profit. So the ROE from 2070 to 2090 is also decreased, which means a company is less efficient in using their equity to create profit. Final, Finally, the dividend per share of Petron for year 2019 and 2017. Dividend per share is the total dividend paid to each shareholder for 12-month period. So DPS is used to share a profit with company shareholders, which is its investor. It also shows whether the company financial performance is well managed or not. So DPS for year 2019, 18, and 2017 is 12 cent, 20 cent, and 25 cent. Therefore, DPS for Petron is also declined, which means the company performance is underperformed. Next is the about prospect of the Petron Malaysia refining and marketing. So we move to the overall. Overall, the financial analysis for the Petron Malaysia is not well and not healthy as many the important historical performance of petrol is declined from 2017 to 2019. So Petrom Malaysia are also unable to predict the future due to the challenge faced by Petrom Malaysia. This may lead the company into a bad position and not good to investor to invest in Petron. So next is technical analysis of Petron Malaysia Refining and Marketing Berhad. Look at the chart on the slide. It shows a 5 years of Petron Malaysia share price from year 2017 to 2021. There is a bull and bear share price for Petron Malaysia. The highest share price that Petron have reached in the 5 years period is at 15 ringgit point 045 cent, while the lowest point that Petron have ever reached is 2 ringgit point 48% in 5 years. But for today price for Petron is 4 ringgit point 93 cents. As we all know, many stock of companies start to rebound from its declining share price due to the coronavirus and several factors. Based on the chart, we analyze for 5 years of Petron Malaysia share price by drawn support and resistance. We also draw a trend line which is a downtrend and uptrend. So the support and resistance that we drawn, the support one is at 3 ringgit and resistance one is at 6 ringgit point 95% ringgit. The support 2 at price 6 ringgit point 95 cent and the resistance 2 at 11 ringgit 095 cent. And for the support 3 is at level 11 ringgit point 095 cent and the resistance 3 is at 14 ringgit point 73 cent. By looking at the today price, the Petron share price is in between support 1 and resistance 1. For a medium and a long term, we analyze that the Petron share price will be bullish. This is because the price has touched the support 1 and the price will rebound until the price touch resistance 1 and break it. Besides, the downtrend that we have drawn is positive as the price break the downtrend trend line and make an uptrend trend line. The uptrend trend line is a good sign for a trader as the price will sustain around at the uptrend trend line. So we also detect a price pattern on the Petromalaysia refining and marketing berhad chart, which is flag pattern. Flag can be bullish or bearish depending on what the trend was before. We detect a bullish flag in between a support one and resistance one. Bullish flag is a signal to investor to buy a stock. However, before buying, investor need to wait until the price break the resistance of bullish flag that we have drawn. This is to make sure whether that is a bullish flag. But this is only can be used for a medium term. Overall, the technical analysis that we use to analyze Petrom Malaysia analyze Petrom Malaysia share price in future is strong and positive to bull. As price recently touched its support one and make a rebound to bull until resistance one and break. Also, the price is on the uptrend trend line and the price pattern is bullish flat. That is all for financial and technical analysis for Petrom Malaysia. Next, I will pass this presentation to Alif. Thank you.
Thank you, Mr. Muain. Now we proceed to the company profile of Dayang Enterprise Holding. Dayang Enterprise Holding is an investment holding company that based in Malaysia. Dayang Enterprise Holding is engaged in topside maintenance service, marine catering and equipment hire and investment holding. For the topside maintenance service segment is about the provision of offshore topside maintenance service such as minor fabrication work and offshore hookup. The marine charter and catering income segment is about the catering of marine vessel and provision of related support services. And then lastly, the equipment hire segment is engaged in equipment in higher operation, and the investment holding segment is engaged in provision of management and secretarial service. Now we will proceed to the fundamental of the company. As you can see from the chart, or return on asset and return of equity. First, we look for return on asset. In 2017, return on asset of Dayang is 5.36%, and it's increasing to 2018, which is 5.94%, and 2019 is the highest, is 7.84%. This show that in 2019 is the highest return on asset that Dayang Enterprise can give. Then in also show that Dayang Enterprise has fully utilized their asset to generate more income. And after that, we go to the return on equity, which is the uh, return that equity holder can get from the profit, which is in 2017 is 15.1%, in 2018 is 40.25%, and 2019 is 15.16%. As you can see that the ROE of in 2017 is fall to 2018, but rise up again in 2019, and it indicate that every 1 ringgit of shareholder equity can generate RM 0.156 in profit. After that, we will go to the EPS. EPS is a name per share that describe the public company profit per outstanding of share. So for the EPS of Dayang in 2017 is 15.46 cent, increasing to 2018 is 16.6 cent, and the highest in 2019 is 23.83 cent. It indicate that in every 1 unit share, it will get earning for RM 0.0023.83 cent. It show that this Dayang company is a profitable company. Next, we will go to the technical analysis. Uh, uh, we have divided to support and resistance to two type, which is minor support and major support, minor resistance and major resistance. For the minor support, we put at 0.7 42, which is because the current price didn't don't cannot break the support line. And for the major support is 0.454 cent, which is so that uh, the 5-year chart pattern show that cannot break the major support. And the minor resistance is at 1.681, which is the current price movement have the possibility to break the minor resistance, and the major resistance is 2.960, which show that um, the current price movement is quite hard to break the major resistance. So for the indicator and price pattern, first we use MA and EMA cross, which is MA 180 and exponential moving average is 15. As you can see that the EMA line has crossed the moving average line, show that the buy signal. Other than that, the MACD also show the same trend, which is the MACD line, which the blue line will cross the red line or a signal line we call, and it show the buy signal. And for the price pattern, we can see that there are falling wages price pattern, which is the price movement entire consolidation, which is from the higher to the small shape. This show that it will be continuing pattern in the future. So for the Dayang technical chart, we predict that the price of the stock will be increased. So that's all from me. I will pass to Mr. Hikal.
Thank you, Alif. I will talk about Hibiscus Petroleum Berhad. This company is relatively a young company, as the company was established in 2011. It is a Sharia compliant company, and the company stocks are traded in the main market of Bursa Malaysia Stock Exchange. They are engaged in exploration, development, and production of oil and gas. Lastly, they have business operation in United Kingdom and also Australia. Next slide. Next is for the fundamentals of the company. As you can see, the net earnings of the company have been steadily increasing. That indicates that the company is profitable and their profits are growing over these 3 periods, which is good. For the return on asset (ROA), the company seems to be generating profits steadily on their assets. However, it suffers a drop in 2019. Moving on to the return on equity (ROE), the company ROE ratio is steadily increasing. That indicates that the management is efficiently using the money that is provided by the equities. However, there is a drop in value in which the year 2018 ROE is lower than the other 2 years. Lastly, the diluted earnings per share (EPS) indicates that it is increasing and is a good indicator that tells us that the company value have gone up. For this fundamental analysis, we use EPS for Hibiscus is because there is insufficient data to do the DPS. Next slide. Moving on to the technical analysis of the company, as we can see, the stock price was experiencing an uptrend during the February 2016 till 2020. The company share price dropped significantly due to the COVID-19 pandemic that affects the demand of oil and gas. In addition to the disputes of oil price between Saudi Arabia and also Russia. For now, the stock price seems to be trading in the range of the first resistance and the first support line. Uh, we believe that the company stock price will not break through the trading range if the COVID-19 pandemic is still ongoing. Next is the price pattern, the second chart you see. Uh, as we can see, the breakaway gap in the price chart, we have highlighted that the stock price suffers a dip in price till it emerges a breakaway gap and reverse the trend into an uptrend. Right after the breakaway gap, the stock price forms a bullish flag in which the stock price suffers a dip, and after the dip, it confirms the price pattern as is established an uptrend. So, our from our analysis, we could say that the Hibiscus Petroleum Berhad, uh, if the COVID-19 pandemic is still ongoing, we think that the price will just hover around the trading range as there is no momentum to break through the uh, first resistance line. So next slide, Alip. So in conclusion, the company analysis using the top-down approach have helped us to see the overall picture of the investment portfolio. We can use this analysis to determine that the macroeconomics, industries, and companies in Malaysia that is performing or not. Finally, this overall analysis have been beneficial for our investment decision making. So that is all from us. Thank you.